What did I do? I went to a GameStop. I purchased Mass Effect and I purchased an Xbox 360 controller. And what did it cost me? Everything. Hey everybody, Walrus here from Walrus Street, here with your weekly for December 7th, 2020. As always, please remember I am not a financial professional. All information in this video is to be used for entertainment purposes only. So the past week we did have a bit of a run up after a slow Monday and Tuesday. On Friday we had the S&P, Dow Jones, and Russell all closing at record highs. The news for the week was mostly positive for the last 3 days. Towards the end of the week and over the weekend we did have Biden pushing for a new stimulus bill, which whenever that happens the market is going to react quite positively as it has throughout the year. It goes up on rumors of news, it goes up on news itself. So if that does happen this week or next week, we will see a bit of a jump. Let's get into the 7 biggest news stories from the last week. Just a reminder, if you haven't checked it out yet, every week I do publish. This is my technical analysis for the stocks that I'm interested in, that I'm looking at. 12 tickers right now. Rocket, Bank of America, AT&T, Work will be discontinued because of the merger. American Airlines, GE, Nokia, Ford, Palantir, Best Buy, Trip.com, and GameStop. GameStop is the newest one added this week. We will be talking about it in today's video. This is definitely a resource that is free for you to use. I will post the link below the video. First news story. Black Friday shopping in stores craters 52% during pandemic as e-commerce sales surge. Oh, that sounds so terrible. This is just in-store shopping, but if you look at like the third key point, online spending on Black Friday surged 21.6% to hit a new record, according to data from Adobe Analytics. People right now are already accustomed to the idea of shopping in stores on Black Friday and then shopping over the weekend into Cyber Monday for their online deals. Effectively, this isn't as huge of a drop as it looks like. We just had that percentage spread out over the weekend, Friday, Saturday, Sunday, Monday. You know, that headline was just a lot of negativity. Spending online on Black Friday this year surged 21.6% to hit a new record, according to data from Adobe Analytics, as consumers rang up $9 billion worth of purchases on the web day after Thanksgiving. That makes Black Friday 2020 the second largest online spending day in the history of the United States, behind Cyber Monday last year. Cyber Monday this year is slated to become the largest digital sales day ever, with spending reaching between 10.8 and 12.7 billion, representing growth of 15 to 35%. So we have a really negative headline here. Media is just the worst right now. They're leading with this basically meaningless headline when in all actuality, the retailers are going to be making more money this year, with Black Friday and Cyber Monday being the number 1, number 2 shopping days in American history. This was a big one. I have to talk about Tesla. I'm not a Tesla holder. I have it in a few ETFs, but I don't actually have any shares on its own. But it is so large and so impactful that it does need to be discussed. Tesla's stock will be added to the S&P 500 in a single step before the open on December 21st. So this is going to be a nice Monday Christmas present, the week of Christmas, for any Tesla stockholders. There was a rumor that it was going to be added to the S&P 500 over a 2-day period, which would possibly mute the effects of it going in slightly, but it was decided just to put it into the index on one day. This is going to create a lot of volatility that week, so there's going to be a lot of options plays for many aspects of the market, especially broad ETFs. The ETFs the week of Christmas are going to be experiencing a lot more volatility than usual as they're accommodating Tesla into them. This week, there was a headline from Elon Musk. He released an internal email to shareholders, and of course, everybody gets a hold of internal emails from giant corporations. The buzzword from the email was that he was telling the employees to cut their spending and monitor the expenses, because if Tesla slips even a little bit, their stock price would get crushed like a souffle under a sledgehammer. How poetic. You know, if you think about the valuation of Tesla right now and how many multiples it's trading past its earnings, that does kind of make sense. It's almost like people are just looking for Tesla to make a single mistake that would trigger a sell-off. I do see where he's coming from on that. Next up, we do have some IPOs this week. The most notable ones, in my opinion, are going to be Airbnb and DoorDash. There are some smaller ones that I'm going to be looking at, possibly investing in, that are IPOing this week, including C3 AI. More people are probably interested in Airbnb and DoorDash. Airbnb's IPO date They're going to begin trading on December 10th on Tuesday. Offering target is going to be $44 to $50 a share. This would have been huge news if COVID never happened. Airbnb, if you go back about a year and a half, 2 years, this was the company that everybody wanted to know when it was going to IPO. You had this incredibly popular, somewhat profitable company growing by leaps and bounds, allowing people to make money with what for most people is their largest asset, their own home. They could use it to make money to offset mortgage expenses, utility bills, whatever, by renting it out. Really cool business model. Airbnb was supposed to be the hottest IPO, but this year, the home sharing giant cut 25% of its workforce and expects revenue to be less than half of what it was in 2019. This IPO is going to be one of those ones that probably does shoot up, but I'm not interested in it at all. This is going to be a volatile company, and I do want to see how it gets back on its feet first. The other IPO is going to be DoorDash. DoorDash is not a profitable company. It had its moment to shine. If you think about it, during the pandemic with everybody staying at home, quarantine, yada, yada, DoorDash had the opportunity to become huge and it failed. I'm not even going to look at its IPO. Good news on the vaccine front. We've got COVID-19 Pfizer-BioNTech's vaccine judged safe for use in the UK. The UK is going to be the first country globally to roll out the vaccine. The first doses are already on their way in the UK with 800,000 due in the coming days. People are going to be contacted. Elderly people in care home staff have been placed top of the priority list, followed by over 80s and healthcare staff. One country always has to be first. I'm glad it's going to be the UK. I know they had a hard time dealing with it, so this is good news for the UK. Perhaps this isn't like the biggest news for the week. I've had this ongoing discussion with my girlfriend about Nikola EVs, how the CEO is a scam artist. If you remember the video, gravity-assisted electric vehicle, their truck without an engine that was just rolling. They got into a lot of hot water for that. GM had a deal with them to build their electric hydrogen pickup truck, and GM backed out on this deal this week. As you can imagine, Nikola's shares took a massive hit. GM's shares continued their ascent upward for reasons. For the most damning one, the claim that it faked the first video of its hydrogen truck driving. The company even admitted to it without issuing an apology and instead claimed its deception was fine due to a technicality. I hope this company fails. Salesforce signs definitive agreement to acquire Slack. Salesforce and Slack are going to be merging. Salesforce, upon this news, their market value dropped like $40 billion. They're only acquiring Slack for $27.7 billion. This was a premium to acquire Slack, and the Slack shares broke up above $40 a share to match this valuation. So any Slack holders are going to be really happy about that massive gap up. I actually think Salesforce is worth a play because they lost $40 billion in market cap to acquire a company for $27.7 billion, which is a net loss of like $12.3 billion. But usually mergers are supposed to be mutually beneficial for both parties involved. And it seems like Salesforce has been punished for this. I do think their share price is going to recover very, very quickly. U.S. Bureau of Labor and Statistics. We had the jobs report coming in this week. In November, unemployment rate edged down 6.7%. This rate is down by 8 percentage points from its recent high in April, but 3.2 points higher than it was in February. The number of unemployed persons at 10.7 million continued to trend down in November, but is 4.9 million higher than in February, pre-virus, post-virus. Regardless, this is actually better than expected. More people are getting to work. This is really wonderful to see. As you know, America is a retail-based consumer economy. The more people are working, the more money they're making, the more money they're spending, the better our stock market does. Now let's go ahead and take a look at the earnings reports for this week. This week, there's not many that I'm very interested in. We're going to skip Monday entirely, but let's take a look at Tuesday. After close on Tuesday, we've got Chewy and GameStop. These are two companies that are tied together by Ryan Cohen. I'm going to go into this a little more detail in a moment. Wednesday, before open, we've got Campbell's Soup. When I was doing my research for this week, I noticed that Campbell's Soup stock did not even move during the coronavirus. It was barely affected. This is like the definition of a consumer staple. I'm not a dividend investor, but if you are a dividend investor, this is the kind of company that you want to just park your money in and just collect the dividends. It's over 3%, a stable company. It's as stable as it comes. After close on Wednesday, we've got Adobe reporting. This should be a beat with all of the new subscriptions and purchases for people working from home. On Thursday, after close, we've got Costco. This should be a beat. Lululemon Athletica, all the Beckys working out in their leggings on their Pelotons at home during the pandemic. This is going to be another beat. Now, before we get into our target stock of the week, I am going to briefly look back and reflect on last week's Trip.com. The earnings were released and everything went exactly as I forecasted it. Trip.com's international sales were down, their domestic and regional sales were up, the stock dropped a day after the earnings, and it started rising again right afterwards. So I've got a bunch of put credit spreads expiring next week, and they look to be completely safe. You can see right here, this is leading up into the after-hour earnings, and it was reported, and boom, stock absolutely dropped. This week's target stock is going to be GameStop. I'm going to be releasing a full video about GameStop with my analysis later this week after they report their earnings. However, I did something uncharacteristically brash on Monday, and I ended up purchasing 100 stocks. I'm not too worried about it based on what I found out. You might think that this is confirmation bias post-purchase researching, and you might be right. When I think of GameStop, I actually don't like anything about the company. My only memory of them is being a university student, and this is right after Xbox 360 came out. I really wanted Mass Effect, but I was a poor university student and I had no money. So what did I do? I went to a GameStop. I purchased Mass Effect and I purchased an Xbox 360 controller, and what did it cost me? Everything. My entire N64 collection, my controllers, my Rumble packs, 20 plus games, the console, all of it gone. All they could do was give me Mass Effect and a controller. Best I can offer. Since then, my opinion on GameStop has not been the highest. But when you think about their business model, gamers are an impulsive lot. And even GameStop, for their in-store releases, they're offering special DLC for the in-store releases based on codes that you get when you make your purchase. Let's take a closer look into the company. Most of this information I'm going to cover more detailed in my video later this week, so we are going to briefly gloss over it. Who's the CEO? George Sherman. He was previously the regional VP of Target, the senior vice president of Best Buy, CEO of Victra, a wireless, a Verizon authorized retailer. So he has experience in tech. The guy that I'm more interested in is somebody who was just revealed to be a 10% stakeholder in GameStop. This is Ryan Cohen. As mentioned earlier in the video, Ryan Cohen founded Chewy. He ended up selling Chewy to PetSmart in 2017 for $3.35 billion in the largest e-commerce acquisition of all time. Since then, he's made significant investments into two companies, Apple and Wells Fargo. He's actually the largest individual shareholder of Apple with 1.55 million shares, 6.2 million split adjusted shares. In September, he disclosed nearly a 10% stake in GameStop. This makes him the company's largest individual investor. When you're the largest individual investor, you have clout in the company. I already feel like this guy's a bit of a visionary because he brought up Chewy, competing at the same time with Amazon, and ended up making it into a successful company. Ryan Cohen is the managing director of RC Ventures LLC, the official firm that holds his investment, represents his investment in GameStop. He wrote a letter that was sent to the board of directors of GameStop and filed with the U.S. Securities and Exchange Commission, the SEC. GameStop needs to evolve into a technology company that delights gamers and delivers exceptional digital experiences, not remain a video game retailer that over-prioritizes its brick-and-mortar footprint and stumbles around the online ecosystem. This is what you would consider to be a scathingly hostile letter. There are rumors floating around that if GameStop sorely disappoints on its earnings, that Ryan Cohen could be initiating a hostile takeover of the company. And with his 10% stake, he's actually big enough to do something like that. This was an article that was published in Barron's just a couple of days ago. GameStop shares have soared 179% in 2020. Wedbush analyst raised his target for 16 from 8. The share price is still rising. Buzz around Cohen's stake helped send shares soaring, but the gain may have been amplified by short sellers. The negative long-term trends GameStop faces have attracted plenty of investors who sold borrowed shares to bet on a price decline. Such highly shorted stocks can rebound powerfully when positive news emerges as people rush to buy in to order to close their negative bets. Short selling interest for the stock is near peak levels at 67.5 million shares sold short, higher than the figure for shares outstanding at 65.2 million. If an investor owns the stock and lends the shares to short sellers who then sell the shares to someone else, there can be double counting of the ownership. This makes the reported institutional ownership exceed 100%. You see this often, but typically it only exceeds 100% by a couple of percentage points. We'll see in a moment GameStop is way past that. If you're a Reddit user, Wall Street Bets has had some insane, detailed examinations of this. GameStop is undergoing a short squeeze where people who betted short on the stock were betting for this stock to go to zero, betting on the company to go bankrupt. What has happened though is more people have bet against the company and the company hasn't tanked. It's actually been rising. So these people are going to be closing out their short positions, and this is going to pump the stock price up higher. As it pumps up higher, as people are closing out these short positions, those who are holding the shares are going to be experiencing this ride upward. You have a user going through all of the math on why the short squeeze is happening, why it is a definite thing, and it talks about the other positives of the company. Once again, though, this is a note about my potential confirmation bias here. Wall Street Bets is where I do find a lot of opportunities for my purchases. They are quite YOLO, and Wall Street Bets is going to be more naturally posting positive news about GameStop. They are among the largest holders, the aggregate user base of Wall Street Bets. This is just based on a self-reported survey result. Right here, they're the 7th largest holder of GameStop shares. GameStop is changing as a company. Just since Ryan Cohen's letter, they have changed their official logo. Also, if you explore their LinkedIn, they're hiring a lot of web developers and online salespeople. So this is a direction the company is traveling in. You can see their new motto here. GameStop is the cultural hub that exists to unite the worlds of gaming. GameStop is going to start selling Vizio TVs. Not only are they selling Vizio TVs, they are going to be selling PC parts. It fits with the trend of what is happening. The financials, the snowflake on Simply Wall Street has high future, high health, which is good for me. That's really all I need for a short-term hold. If you look at their balance sheet, they do have more assets than debt. They do have a lot of liability, but I looked into this and a lot of this is in the mortgages and the leases for their brick and mortar locations. And if they're making a shift to online, they are going to start unloading that and also unloading the salaries of the personnel working in those areas. So their liabilities should be going down. Stock price right now is sitting around $17. We can see that quarter one, they did have a beat. Quarter two, quarter three, they missed. Quarter four, they're probably going to miss. But first quarter next year, they should be beating because of the new Xbox and PlayStation console releases. The chart, you can see the run up here. So we're currently up here. This is not even close to an all-time high. If we zoom out on the chart, we can see their all-time high going back about 5 years was around $50 a share. We're not even near that. So this isn't like you have to worry about buying it at an all-time high. The RSI is pretty high right now. We had a golden cross back here in September, and since then it's just been rising, rising, rising. The share price has already tripled, so this should be a warning sign for a lot of people. But with the short squeeze effect, I'm not too concerned. Like I said, I'm going to be doing a more detailed analysis on GameStop this week. I just wanted to hit the highlights today. Now let's take a look at my Robinhood Options Trades for the week. As you can see, I had a pretty positive week last week. I do have some options still out right now, including my Trip.com put credit spread, my space calls on Virgin Galactic. You can see my holdings down here right now. Every week I am adding to my Rocket position. It's one of the companies that I am most bullish on right now, and I'm loving the fact that it keeps dropping down in price and allowing me to lower my cost basis. You might notice also that I did add in 100 shares of GameStop. My cost basis is a little higher than I would like, but because I am so bullish on this as it stands right now with the short squeeze, I'm not too worried about that. Let's get into my options trades for the week. My first trade of the week is going to be on Virgin Galactic Holdings. I am going to be doing a 1 week put credit spread. So I am going to sell a put at the $27 position. I already looked this up. It's pretty close to 30 delta. And I am going to be buying a put at the $25.50 position. That's going to give me $42 in premium. One, swipe up to trade. And it's only $150 in collateral, so that's actually about 30%. That's pretty good. My cost basis for Rocket right now is $21.03. I keep lowering the cost basis every week, which is wonderful. I am going to trade options. We're going to move out 1 week. And since I already hold shares, I'm going to sell a covered call above my cost basis. So I'm going to hit the $21.50 right here. 1 contract, collect the $18 in premium, and there we go. Going back to my Nokia, Move out a week. Since I hold shares, I'm going to sell a call. $1, $2. Woo! Collect the premium. All right, let's move on to GameStop. This is the big one. I'm going to move out 2 weeks just in case earnings is not so favorable. And I'm going to sell a put credit spread. So we're going to start out with the 13.50 put. And we're going to end up buying the $13 put back. Continue, that's $48 in credit. And I am going to go ahead and set up 20 contracts of this. So this is something that is, if I can get a fill on this, I'm going to be the happiest person in the world. If you can see right here, I'm going to be getting $940 in credit on this trade, and the collateral is only $1,000. So if I'm wrong, I'm only going to be losing $60 on this, and if I'm right, I'm going to be walking away with $940. This is a pretty good deal, and this is the benefit of playing volatile stocks like GameStop. Now, something else that I thought was really hilarious with GameStop, if you move out to Christmas Eve, and you come down here and you check out the $12.50 and the $12 puts. If you do the same thing and you set a put credit spread, sell the $12.50, buy the 12, what do you see here? Your credit is going to be $51 and your collateral is only $50. So you're actually making more in the trade on the premium. And if I try to send that, order premium must be less than collateral. So if you ever are wondering if you could get premium higher than the collateral, no, Robinhood will not let you do that. So the adventure this week, the biggest play is going to be seeing if I can get those GameStop options on the put credit spread to fill. And if I can, I am going to be a happy, happy man getting that much premium at the risk of only $60. There you have it. That's what I'm going to be doing this week. Hope you guys enjoyed the weekly. Retail's looking better than ever. Tech's starting to improve a little bit. There should be a stimulus announcement this week. Vaccine is beginning to roll out. Everything's pointing green. I'm not seeing any negative. Should be a lot of opportunities if you're willing to take the risk. As always, thank you guys for stopping by. Please hit the like and subscribe buttons if you're enjoying the content. I do put on one of these weeklies every single week. Thanks for stopping by.